Now it works on my YouTube. Yeah, it was working. The key was just how much of the delay it was. That was the problem, yeah. What I like to do with these is I do like to answer some of your guys' questions, more so towards the end. I have certain things I want to talk about. I like to answer some of your questions at the end, but it's very hard to do that when there's a big delay because I'll be talking about something and then a question will come in, you know, 30 seconds later, and my attention span is so short, I'll forget what the question was about. So we'll see what happens. I got both running at the same time. I'll delete one and move one up. I look better on this one on the Periscope, but but welcome guys. Week two of doing this. This is our trading recap. If you guys are new to following me, this is something I used to blog about every week last year, or whenever I started last week. I used to blog about it, and essentially what I would do is, at the end of each week, I like to review my trading week. I like to see how I did. Obviously, P&L was important. I don't worry about that too much, but more so, how did the week go? Did I follow my rules? Did I break any rules? Did I make any mistakes? Is there any way I can get better? What do I need to work on? And it's a way to kind of just vent, refresh, get a clean slate for the next week. And what I did was we had a few people really enjoyed the blogs, but for the most part, you guys said that you would prefer a video version of it. You're lazy. That's what it is. You're lazy. But so we're trying it out video this year. We'll see how it goes. I don't know if I'll keep doing it here on Periscope. I don't know if I'll do it on Twitter. But we kind of just take it how it is. But this week I titled it, which you didn't see, but this was a really up and down week of trading, guys. We always talk about throughout the year, trading is a grind. Trading is about the big picture. Reading is so hard. And throughout the year, there's going to be ups and downs and ups and downs. For you guys that have been with us for a while, you've seen what Jason and I, what our syndicate curve looks like throughout the year. And it's not just a straight line up, right? It's a slow wiggle. And what's important to know is that those ups and downs come not only year to year, month to month, week to week, but day to day as well. And this week was a massive up and down. Jason had a very good week in the syndicate. Me, not so much with my trading. I actually hit one of the largest losing streaks that I've had in years. When I'm scoping, it's on Twitter as well. So I'm trying both out. We got 14 watching on YouTube. So we'll see which one I keep. But we started out the week hot. We started off on fire. If you guys remember our first week of trading for the year, we got hammered pretty bad. There's a lot going on and just didn't work out in our favor. Last week, we made a massive comeback, really, really big week last week. And we started off the first 3.5 days of this trading week on fire. We were up about 281 pips. And we came into Thursday. Thursday was unemployment claims as usual. Also, the ECB press conference, and I'm not gonna blame Mario Draghi for whatever he said, but because we weren't trading during the press conference. That's really important for you guys in the live room. You saw it. We sat there, we waited, we did analysis, but we weren't placing any live trades during that because of the expected volatility. But after that press conference, I just hit a massive losing streak. I lost 11 trades in a row. Technically, I had one winner in there, but the one winner, I forgot to put it into the syndicate, so I can't count it. But 11 trades in a row. 11 in a row. Is that normal to you guys? Have you guys ever experienced 11 losers in a row? What's your biggest losing streak? I know Lax, if you're watching, me and Lax battled back a few years ago. We had like 17 and 13 going on. So I didn't top that, but pretty big. Not typical by any means. So 11 losers in a row. And with 100% honesty, I came into the live room on Friday just done. I had enough of the week. I'm like, we came from an emotional high to having, boom, it all taken away from us. And I came in Friday, feeling like I wanted to revenge trade. I'm telling you, you rarely hear this from me. I don't think you'll ever hear this from any other professional traders out there aside from those that trade empowered. But I came into the market, I wanted to revenge trade. I said, I got one more day. I'm going to get back. I'm going to make this money back. And I had to stop myself. One of the things that during my training course, we work with our members on creating a trading plan. And in that trading plan, one of the most important things is creating a routine. For you guys that saw my weekend review video about the Akrasia effect, one of the biggest things is creating a routine in your day, waking up the same time, doing your analysis at the same time. And at the very start of that trading routine is a self-checkup. You want to check yourself to make sure you're in the right mental capacity to trade. And sometimes it's a lack of sleep thing. Sometimes it's, a loved one died, sometimes it's greed. In this particular day on Friday, I did my self checkup and I said, man, I noticed, I was able to catch it because I've done this for a while now. I noticed that I was in revenge trade mode. So what I did was I made myself take a timeout. I took a timeout. I took a break. I got away from the computers, got away from the charts, cleared my mind, and made sure I had all of those emotions out of me before starting my trading day. Because what would have happened? What do you guys think would have happened if I just would have started trading normally and didn't do that self-checkout and realize what type of mental state I was in? Do you think I would have made all of my losses back, or would I would have dug myself into a deeper hole? What do you think? Click that X, man. That's the secret. Yeah, I would have dug myself into a deeper hole. Typically, and Nico just wrote this in. Typically, what happens when you go in with that mindset of revenge, you start rushing into opportunities that maybe you do it too early. Maybe it's an opportunity you shouldn't even be trading, but you basically end up gambling. It's like if you've ever lost money on the craps table or the blackjack table, and you just start throwing money, and I'm gonna make it back. It usually ends worse and you blow everything. So the best solution is if you ever feel yourself getting into that revenge mode or even that overconfidence mode, is to settle yourself down or stop trading. Now, Friday would have been a day typically where I just would have said, you know what, we'll start over next week. I do have a live room to run. And one of the best parts about having that live room, we always talk about the benefits for the community that's in there. For me as well, I got to vent. I spent about 15 minutes telling these traders how I felt, what I wanted to do, and I got to vent. I got all of that out of me, and I think that is key in trading. Trading is a very lonely, I'm about to say lonely sport. Trading is a very lonely career path. Most of us are sitting at home or somewhere with a laptop by ourselves. No one else, maybe one other person has any slightest idea what trading is, and when you have a bad day, there's no one to tell. It's not like at your regular, 9 to 5, your regular day job where you go in, you're having a rough day, you can find a coworker, you can vent to them, you can talk about your boss, you have that water cooler talk. It's not like that. And typically what happens is traders keep those emotions in, and they keep them in so much that boom, they eventually explode, they come out, and bad things will happen in your trading. So that's one of the great parts of having that live trading community, is that we can talk to each other each and every day. And, misery loves company. You get, you're having a bad week and say, hey, John, tough week for me. Just lost 5 patterns in a row. John fires back. Man, I'm on number 6. And it makes you feel a little bit better. We trade. Our live room is 3 hours a day from 8 a.m. to 11 a.m. New York time. So that's one of the lessons. I want to tell you guys about that. So it did end up being a bad week. Good week, followed my rules, didn't take any trades that I wasn't supposed to, but a bad week as far as the P&L goes. But that happens, guys. We're 3 weeks in. We've got, 50 weeks of trading left. I'm not too concerned about that at all. This concept did, and we'll do some Q&A later, guys. This, me going on my little vent during the room did spark another conversation. And it was about money management, and we had a live room trader type in. We had that's the one thing Forex Factory is good for. You want to stay out of those trading forums, guys. Stay out of those trading forums. Trust me. You're more harm than good will come from those. More harm than good. You want to be around traders that are serious. The majority of traders that hang out in trading forums are not serious traders, because if they were, they wouldn't be spending their entire time in trading forums. But that's another topic. But we had got the subject that came up. One of our live room members said, hey, Akil, I got a question for you. I read something about hedge funds and how the best hedge funds out there are they're averaging 5% a month. This can't be true, right? And you guys have seen my videos before about, I I always get yelled at on the internet when I say, if you can make 3% a month, you are doing great. You are doing better than the majority of traders out there. If you're not going broke, you're doing better than the majority of traders out there. 90 plus fail. But typically what you'll hear in the prop firm world and just in trading in general, assuming there's no money management strategy put into it, meaning you're not compounding your position size throughout the year, that's what's going to make you the real money. But if you can average, this is what's widely considered by the professional traders. If you can average 2% a month, you're considered a good trader. And I know some of you are working on prop firms. A few of you I work with are there. You can back me up on that. You know, if you can average 2% a month on average, you're considered a good trader. If you can average 5% a month on average, that's 60% a year, you're considered a really good trader. And a lot of people don't see this because there's so much out there about making 100% a month, 50% a day. And we went on to talk about this in our live room, and the trader said, okay, well, Akil, I had $1,000 account. I took my $1,000 account to $1,050, right? So that's a 5% return right there. Does that make me one of the best traders out there? And one of the ways that people manipulate these numbers are just overexposed position size, right? So I asked this trader, I said, hey, what are you trading? He said, I'm trading one mini lot. One mini lot per position on $1,000 account. Now, before I get into it, do you think that's a good position size? Do you think it's too much, too small? What's your opinion out there, Periscope and Twitter world and YouTube world as well? If you guys are on YouTube, it's much, the delay's not there on Periscope, so go ahead and check that out. Too much. That's Pip Chaser says that's good. That's fitting, Pip Chaser. And again, it depends on a lot of stuff. What time frame you're trading, how many positions. In general, that is too much. Again, you can make it work if you're trading, maybe one pair. That's all on a very small time frame. But one mini lot, $1, right, per pip on $1,000 account is way too much. Right? It's great when you can make your $50, right? Say you take 2 winning trades, you make your $50. That's a 5% return. But yeah, I would say micro lots. I would advise them to trade, if I can advise on position size, I would advise them to trade micro lots. But think about it like this way. Everyone thinks of the wins, and the wins are good, right? Oh, I got $100. That's 10% this month, 10% today, right? The wins look good, but what about when you lose? What is that? What is the average loss for you guys? Someone type in an average loss. And again, this is assuming a trader is trading one mini lot position. That's $1 per tick on $1,000 accounts. I see 23 pips. What's the average loss for you guys? It's going to be different depending on what you're trading, but just want to, for examples purposes. All right, let's take 25, right? 25 pips is the average loss. What is a typical losing streak for you guys? Have you guys ever lost 4 trades in a row? Yep, 5. 5 trades in a row. All right, so let's say you take your average loss, right? I'm horrible with math. I got to use my fingers. Let's say you take your average loss. Average loss is 25 pips, right? You're trading one mini lot, so you lost $25 per that trade. Now you've taken 4 trades in a row, right? So that's $100. How much of your account, what is your maximum drawdown on that? You've lost $100 on a $1,000 account. What is that maximum drawdown? What percentage is that? 10%. And you can typically lose 4 trades in a week, right? Is that a little worrisome, guys, to lose 10% of your trading account in a week? What if you have 2 bad weeks? 20%? Think about this. How many trades, what is the biggest losing streak would you have, what is the biggest losing streak that you would have to go on before you blow your entire account? Not a very big losing streak, right? You see how easy, it's very easy to compound those numbers and get really, really big win percentages, but you got to look at the other side of that as well. When things aren't going too good, again, you take my week this week, horrible week. If I'm trading that inflated position size, guess what? I might have blown half my account in 1 week. And now one single week, one single negative week has affected my entire trading year. The key to trading isn't making as much money as possible. I know I'm going to offend some of you by saying this, right? It's not about making as much money as possible. What is the number one rule in trading, guys? And you've heard me, if you follow me for any time, you've heard me and Jason say this 1,000 times. Don't go broke. Conservation of capital. If you're trading the right position size, there should be zero chance of you blowing your trading account. You should literally have to take hundreds of losses in a row to be at any danger of blowing your trading account. And the main key, right, the main goal, is to live, just like Jim said, live the trade another day. Because guess what? As long as you have a chip in a chair, right, you can play this game. Am I right? As long as you have money in the account, you can place a trade. As long as you can place a trade, you have the opportunity to grow that account. What happens when you blow it all? Can you trade anymore? You're done. You're done. On week 3 of the year. So it was a pretty cool conversation that we had about that, just about position sizing, and we didn't get too in depth into it, but about, how a lot of what's out there isn't really true. You guys shouldn't be setting goals to make 20% a week, 20% a month. You're going to have months like that, but you shouldn't expect to average that. It should be a slow, steady grind to the upside from bottom left to top right. But your drawdowns, right? You want to keep that equity curve nice and smooth. Minimum drawdowns, minimum drawdowns. You don't want to see something like this, the choppy equity curves, because that's how you hit one bad patch and you blow your account. And then once you blow your account, you're done. Went on a year of no trades for blowing an account. Yeah. Once you blow your account, you're done. You got to play on the sideline. You've been taken out the game. Speaking of game, beautiful goal by Spurs this afternoon. Oh my gosh. Versus Crystal Palace. Oh my gosh. But I'll open it up to some Q&A. I was going to share a chart with you guys on Google. I had something. I'm still in the Aussie dollar trade. That's the only position I have left open over the weekend. But obviously we're on Periscope now, so I won't be able to do that. Maybe I'll flip the camera around or do some type of magic like that. We'll see. Maybe I will do it. I think I will. But any questions before we head over to the chart? I think I'm going to give that a try. Do it, Akil. Do it. If you blow your account, you'll get beaten by your wife, so beware. Oh man. All right. Let me show you the one trade that I'm in. This is gonna get weird because I gotta move some stuff around here. Elliott Wave Akil. All right, we'll do some Q&A later. Let me just flip this thing. Come on. There we go. All right, you guys can see the chart right here. This is the German DAX. We don't want to look at this. Let's take a look at Aussie dollar. And if you're on YouTube, I'm sorry. I could go ahead and share this. Hold on. Look, it's me in like 2 places at once. How awesome is this? Boom, screen 4. Get all weird. Okay. So the one trade I'm still holding over the weekend is going to be on Aussie dollar here. Let's go down to a 4-hour. This is a pretty cool. Well, we can look on the daily first and just look at the level that we're at. We're coming back to previous structure of resistance up here again. Price action bumped down. Boom, bounced off this level, retraced back up. We broke it. Support after it's broken turns to what, guys? I just gave you the answer. Type it again. After support is broken, it turns to what? Hey, there we go, resistance. So we're at that level right there. If we want to get fancy, we can also bring in our Fibonacci retracement tool here. Fibonacci retracement, swing high to swing low. We've got a nice 382 Fibonacci retracement sitting there as well. And I did get taken out on a smaller trade on the Aussie. A little rising wedge pattern with divergence. That's pretty neat as well. I did get taken out on a smaller trade in the Aussie. What we have here is a bearish bat pattern. We had an X leg starting right up here at 70.47s. Swing high to swing low, X to A to B, B to C. We got a CD completion right around here. And you can see market actually came up. We made a retest of our X leg. We got some really nice wicks at the highs there. Again, we have some dojis and some of the pin bars heading back. We have some really nice wicks up here showing that the market is, we're just not going to blow through that level like we did with other trades we had on the board. We're actually seeing that we respected that level. And then we started to get a brief retracement. So obviously we have no idea if this trade is going to go on to win or not. Once we place the trade, it's really out of our hands, but it's a good sign to see that the price action did test that X leg. We do have higher shadows on your candle, higher shadows to the upside, which means that the bulls are getting beaten down a little bit. And hopefully we can see a little bit of follow through. Again, we don't need a full reversal to make profits on this. We just need a little bit of follow through down to that 382 and we can bring some pips home. So I'll be watching that on the open tomorrow. And that's the single trade I have open during the weekend. Aside from that, it's going to be starting over fresh, clean slate. So here we go. Back to normal. This is going to be the weirdest video I've ever posted, I swear. But any questions before we head out? Usually everyone wants to scream for the charts. Dylan says, what percentage of your account do you risk per trade? I don't have a set risk per trade. We actually base our risk off of our entire trading portfolio. So we move up and down position sizes depending on the portfolio as a whole. Once it reaches a certain standard in our money management spreadsheet. So, but we use a base position size per trade across our portfolio until we hit that level. So we're not switching it up is what I mean. We have certain people that say, hey, I'm going to trade a standard lot on this or a mini lot on this one because my risk is 100 pips. Oh, but on this one, I'm going to trade 2 standard lots because my risk is 50 pips. We keep it consistent across the board. I heard something about first time in live. Hey, thanks for coming out. Hey, make sure you subscribe to my YouTube channel. Lots of videos over there, including this one, will be recorded and put over there. If I missed your question, type it in again. I saw something about 4 monitors. There's a little saying in the trading community, how many monitors does a professional trader need? And the answer is 1 more. Twitter feed also lags by about 5 seconds. All right. I'm getting a lot of things, Jim. I can get it close enough here, I think, on Periscope. I guess there's going to be lag no matter what you use, but try to get it as close as possible. Anything else before I head out? Above my, hey, what's going on, Tony? What is your stop loss on that trade? It is above the X leg. Can you get that money management spreadsheet? You can only get that if you're involved in our 12-week transformation training course. I'm sorry. Do you use 4 monitors? Can you show the setup? I don't, yeah, it's not a, Greystone has a more spectacular setup than me. It's simple 4 monitors. I got a mini one down here as well. And then I'll have a second setup over here. I'll set up my laptop and whatnot. Look at that. It's me, 3 places at once. Me, myself, and my ego. But yeah, I mean, you don't need 4 monitors. One of the reasons I have it is because I do education. So I need to follow a lot of things at once. Monthly fee for the room, it is $97 a month. You get the first week free. So come in for a free trial for my live trading room. And of course, our syndicate program, that's $1 for the first month and then $49 afterwards. So all of you guys should be in that. That's a steal. Trust me, the biggest steal you're getting out there. Yeah, you only need 2. You don't need a massive amount of monitors. There's no, I mean, again, I've got to, because I teach, I need to pay attention to what my clients are asking me and look at charts at the same time. I don't have any excuse for the 4th one. It just filled an empty void. But yeah, you need one. All you need is 1 monitor, a charting package, and internet connection. Want some pics of a snowman you built with your son? Enjoy. Hey, take care, Nico. What's a good broker for a small account? I can't give any broker recommendations. I'm sorry. I would say go with a reputable one though. Don't go with a no-name, questionable sounding broker. Go with one that's known. Don't go with brownpaperbagmoney.com or anything like that. Go with one that's known. If you Google search, like best Forex brokers, you'll start finding some commonalities on that list. Ever heard of Trading 212? Never heard of it, no. Mini lot is $1. Yes, a mini lot is $1 per trade, yes. Hey, nothing wrong with newbie questions. That's how you learn. Trust me, when I went through my training with Jason Stapleton, I asked every question in the book. That's how you learn. You never get the answer if you don't ask. How many losing trades would you say you should be able to take before blowing your account? Me? Finding a broker should not be a problem. Finding a broker is easy, guys. That should be the easiest part, is finding a broker. It takes nothing but a Google search, unless you're in, in America, I should say. How many losses would it take for me to blow my account? It would probably take, let me just think off the top of my head. Hold on. That's a good question. Let me see. Give me a second. Maybe like 200 in a row. I'm dead serious. Probably like 200 in a row. Hey, Greystone, what's going on? Yeah, that's what I said. If your position sizing is correct, there should be zero danger of you blowing an account. You've got to be really, really bad. I mean, you've got to work hard to be that bad. You can't, even the worst trader will get lucky at some point before taking 200 losses in a row. You've got to work on being bad. You've got to purposely want to lose and be really, really good. You got to really, really be good at being bad. Man, my Skype killed me. Yeah, I'm hoping that's not true, Greystone. The guy that sent me the message never responded. I'm hoping that's not true. If it is, that's a damn shame on behalf of that person. I'm going to assume it's not true, though. It was a mistake. It's hard for you to get your money, but it's hard to get your money you lost. I'm a master at doing things wrong. Oh, yeah. 200 trades in a row or being on the wrong side of a Swissy trade. Ooh, he went there. We were actually on the right side of it. Not by accident. It was a pound Swiss trade. But yeah, there are those black swan events. Yes, that could happen. That could happen. Yep, pound Swiss cipher. You remember it. Some people woke up very, very happy. Others not so much. Tough day. But yeah, again, that's the point. Too many people have if you're in any danger of blowing your account, guys, if you're like, hey man, if I take 5 more losing trades this week, I'm going to blow my account. You are trading too large. And again, it's all good when you get that massive return, when you can brag to your trading forum friends about how you returned 50% in a week. But then when you're out of the trading forum next week because you've blown your account, then what? It's a marathon, I'm telling you. It's not a sprint. We talked about a lot in both rooms, my New York trading room and Jason Greystone's London room, about instant gratification and how so many traders want it, and they want it right now. And those are the ones that fail. The ones that succeed are the ones that take their time, slow and steady, right? Slow and steady wins the race. It's a marathon. It's about being consistently profitable at the end of the year. Why do you think I'm not flipping out over taking 11 losses in a row? That's going to mean nothing in the bigger picture of my trading. This is why you want a 10K account. You can only trade so small. Yeah, you can trade with like a $3,000 account. Just trade micro lots. Just trade 10 cent per pip. Trade micro lots. Just trade small. You can start with 3,000. Just trade very, very small. So small that you won't blow your account. That's the thing. So small that you're in no danger of blowing your account. Because usually you quit. Usually you don't come back from that. Some traders do. Most traders, they don't come back from that. You're done. So let's wrap things up. We'll get this posted over to YouTube. I'll go ahead and cancel whatever this other. Thank you for joining me. For you guys that are watching on YouTube, if you're late, we had some. It lagged so much that we just moved it over to Periscope. But thank you for joining me anyway. I'll get this video, a better version of this, put up on YouTube later today. But Thank you guys for joining me. Do me a favor, guys. I'm trying to reach 25,000 subscribers this year. So if you're not a subscriber on my YouTube channel already, do me a favor, hit that subscribe button. If you are a subscriber, just share this with a friend. Find a trading buddy. Let them know about this video. Tell them to subscribe. My first account was a $5,000 account. Yeah. So yeah, join. There's over what I think 150 videos over there. And of course, let me ask you this before I leave. Do any of you are any of you not confident about how to read price action? Meaning that if you look at a chart, is it sometimes confusing to tell whether we're bullish or bearish? Be honest. This is something I skipped in my education. I paid money for a trading course and just wanted to know how to trade and make money. I skipped over what's important. If you are that person, you know someone like that, just go over to our website, www.tradeempowered.com. This isn't a plug to buy anything. There is a free training over there called Into the Gray. Go to the website, click over on, let me just go ahead and, I got this up here actually. Sorry, Google people, it's gonna get crazy again. It's gonna get crazy. Go to our website over here. Boom, boom, boom. Here we go. TradeEmpowered.com. If you're a struggling trader, make sure you fill this out. This is what changed my trading career. Trader assessment. I filled it out by accident just because I was bored and had nothing to do. Ended up answering a few questions. And basically those questions prompted me to talk to a professional trader, prompted me to finally admit that something was wrong in my trading. And it allowed me to take, I took action and took the steps that I needed to become a better trader. But you at least know what is wrong with your trading, and that's big. You can't fix it if you don't know what's wrong. So take that trader assessment, tradeempowered.com. If you're looking for how to read a price chart, head over to the Learn to Trade tab and just scroll down. You can watch all these, but make sure you watch this one right here. This is a 3-hour video. Why the market moves, how to apply OODA loop theory and IPDE to keep you one step ahead in the market, how to read a chart using the NSH and NSL principles, how to develop rules-based strategy using the if-then process, thought process, how to trade trend, counter trend, and a lot more. So make sure you watch that and let me know what you think. After you watch it, shoot me a message on Twitter, shoot me a message on YouTube, Facebook, wherever. Let me know what you think. So until then, plan your trade your plan. I'll get this on YouTube ASAP. And I'll see you guys, 12-week transformation members. I'll see you Monday. Live room members, I'll see you Tuesday. Syndicate members, I'll see you Monday as well, or whenever we have some action. And again, 1-week free trial in the live room, either of them, New York or London, and $1 syndicate access. Take advantage of that. I'll see you guys and have a great weekend. I'm going to go enjoy the snow. Take care, guys. Thank you for joining me.